Hey everyone, in this video we're going to be going over Meta Platform stock. We're going to go over their Q4 earnings report, why the stock crashed over 20%, what I'm doing about it, what I think is fair value. But before we get into all those details, if you could smash the like button, it really helps the YouTube algorithm. And if you're not subscribed to the channel, definitely subscribe. Now let's get into it. First, I like to point out I have a massive position in Meta, so this one definitely stung when I heard the news of the drop in the price. As you can see here in the photo and after hours, the stock is down to under $249, $248.30, down $74.70 at the time of making this video. More than 20% drop, 23.13% down in after hours. This was a huge crash for a company as big as Meta Platforms. We are talking about around $200 billion of market cap that has evaporated from Meta stock. So huge drop. Now let's just go over some of the numbers to get an idea of how the earnings report went. In the most recent quarter, Q4, there was $33.6 billion of revenue. This is up 20% year over year against the $28 billion in 2020. So that was a pretty great growth rate in revenue. The issue is the costs and expenses this quarter went to $21 billion, up from $15.29 billion a year ago. So there was a 38% increase in costs and expenses, which basically made the profits actually slightly lower year over year because of the increased expenses. So profits, income from operations was $12.5 billion, 12.585 versus 12.775, so down 1%. It's not much of a negative, but the thing is, year over year, a company like Meta is a high growth company. You don't want to see income going down. You want to see it raising at accelerated growth rates. Unfortunately, it was not. Operating margin of only 37%, still an amazing margin rate, but compared it to a year ago at 46%, it is down pretty significantly. And net income at $10.285 billion. This is down from the $11.2 billion a year ago, down 8%. So when you're looking at the most recent quarter, year-over-year comparisons, it's not the greatest picture. But if we look at the entire year of 2021 versus 2020, we do see a better picture actually overall. The growth is not really that much of a problem. The net income, things like that, are growing very healthy. $117.9 billion in revenue. This is the first time a full year broke $100 billion. In all of 2020, the revenue was around $85.9 billion. So there was a 37% year-over-year growth rate in revenue for the entire year of 2021 versus 2020. Now, costs did go up year over year, 34% growth in the expenses. So instead of $53.29 billion a year ago in 2020, it was $71.17 billion. Now, even with those increased costs, income from operations for the entire year of 2021 was $46.75 billion, up 43% year over year versus the entire year of 2020 at $32.67 billion. The operating margin for the entire year was 40% in 2021, whereas it was 38% in 2020. So when you're looking at everything as a whole, the numbers really are increasing and the growth rates are very healthy, and the business is obviously producing tons of cash flow, which we'll get into in a bit. Now, Meta breaks down their revenue between advertising and other revenue, which is the family of apps, so Facebook, Instagram, WhatsApp, things like that. And now they're also breaking out separately Reality Labs, because that's becoming a more and more important part of the business. Still extremely early days, but they believe in the metaverse. They've changed their name to Meta Platforms from Facebook, and splitting out Reality Labs will show the progress in the metaverse going forward. So when it comes to revenue, advertising came in at $32.639 billion this quarter. This is up versus a quarter ago. The September quarter, it was $28.2 billion. In the June quarter, it was $28.5 billion. March quarter, it was $25.4 billion. And a year ago in December of 2020, it was $27.1 billion. So there is nice growth in the advertising business. When we're looking at the advertising business year over year from 2019 to 2020 to 2021, it was $69.6 billion of revenue in 2019. In 2020, it was 84 billion, and in 2021, it was 114.9 billion, crossing over that $100 billion threshold. So clearly, the advertising business is growing revenue extremely well. I wouldn't be worried about that business at all. Their other revenue segment, which is still part of the family of apps, had $155 million of revenue in this quarter. It's an extremely minimal number, and when you're looking at it year over year, it is down versus a year ago at 168 million. But if you look at the entire year of 2019, 2020, and 2021, the other revenue segment went from 541 million to 657 million in 2020 to 721 million in 2021. So extremely high growth rates, but still an extremely small number, not even $1 billion business for the entire year. So it's extremely small when we're looking at that other revenue segment for the family of apps. Now, Reality Labs, the thing we really want to know about because it's going to dictate the future. A extremely small business today, but let's go over the year to year from 2019 till 2021 because they give us that. In 2019, Reality Labs only did $500 million of revenue, 501 million to be precise. In 2020, it did $1.139 billion, more than doubling its revenue. And in 2021, it did $2.274 billion. So on the revenue side, this business is growing extremely healthy. As far as the most recent earnings report in Q4, they did $877 million of revenue. This is up from a quarter ago of $558 million. The quarter before that in June, $305 million. The March quarter was $534 million. And a year ago in December of 2020, when the Oculus Quest 2 came out, $717 million. So it was a tough comp against a year ago, but they still did beat that revenue number, selling tons of Quest 2s. Now we need to go over the income from operations. For family of apps, of course, it's extremely profitable, and in this quarter, there was $15.889 billion of income from the operations. Now, a year ago, to get an idea, there was $14.874 billion coming from the family of apps. So income from operations for family of apps has healthy growth. In 2019 as a whole, there was only $28.48 billion of income coming from family of apps. In 2020, that went up to $39.29 billion. In 2021, it went from $39 billion to $56.946 billion as a whole. So massive amounts of growth in the income coming from family of apps year over year for the entireties of 2019 to 2020 to 2021. But unlike family of apps, Reality Labs has the opposite thing happening. They're actually losing money like crazy. Now, it's great that their revenue is growing. It went from $500 million in 2019 to over $2 billion in 2021. But at the same time, the income from operations has went from in 2019 them losing $4.5 billion to 2020 them losing $6.6 billion to in 2021 they lost over $10 billion at $10.193 billion of losses from operations. So this massive loss, and in the most recent quarter, 3.3 billion lost. So there's no easy way to say it, but the unfortunate truth is Reality Labs, the metaverse, today is just a money pit. It is losing money like crazy, and Meta is going to probably spend and lose many more tens of billions of dollars before things turn around and it becomes a profitable business. But Meta is betting that the metaverse is going to be a massive multi-trillion-dollar business, and because of that, they are willing to put in the money and the time, the reduced earnings, the entire company on the line basically on a bet that the metaverse will work out for the long run. It's not a 1 or 2 year plan, it's a 10-year plus multi-decade investment. So if you're going to own the stock, you have to understand, you know what? It's not going to have the same growth in net income as maybe some of other big tech companies for a little while because you are going to be heavily investing in the metaverse and you have to believe in that working out eventually if you're going to own this stock. The one good thing is if the metaverse does turn out to be a massive business worth trillions of dollars, who is most likely to win that market? The company that is putting $10 billion plus of losses in per year to build it, or companies that just throw the name around and don't really put the investment in that needs to be there to win. So, needless to say, I am betting obviously in the metaverse working out. I do think that they know what they're doing, that if anyone's going to do it, it is going to be Meta Platforms. I believe the R&D that Meta is putting in is not just going to help with virtual reality, but it's going to be helping with augmented reality. And I look at the metaverse as a whole as just an extension of our digital lives that we currently do on our smartphone, but extending it out through virtual reality, augmented reality, mixed reality, etc. Now let's break down some of the numbers. Keep in mind at the very end of this video, we are going to also be going over valuation, so definitely stay tuned for that if you've already made it this far. Family daily active people at 2.82 billion on average at December 2021, an increase of 8% year over year. As far as monthly active people, family monthly active people at 3.59 billion people. This is an increase of 9% year over year. The Facebook daily active users were at 1.93 billion, an increase of 5% year over year. Facebook monthly active users at 2.91 billion, an increase of 4% year over year. Ad impressions and the price per ad in the fourth quarter of 2021. Ad impressions delivered across our family of apps increased 13% year over year, and the average price per ad increased 6% year over year. For the full year 2021, ad impressions increased by 10% year over year, and the average price per ad increased by 24% year over year. Capital expenditures, including principal payments on finance leases, were 5.54 billion and 19.24 billion for the fourth quarter and the full year of 2021, respectively. As far as share repurchases, they repurchased $19.18 billion and $44.81 billion of Class A common stock in the fourth quarter and full year 2021, respectively. As of December 31st, 2021, they had $38.79 billion available and authorized for repurchases. Let's just stop right there and go over that for a second. In the last 90 days or so, Facebook purchased almost $20 billion of stock back. And in the past year, almost $45 billion of stock they have bought back. They clearly believe they are undervalued. They are putting their money into buying back the stock hand over fist, and they still have almost $39 billion already authorized of them to be able to buy stock back. With the stock price crashing in after hours, I don't know about you, but my expectation is they are going to put that $38.79 billion to work and buy a ton of stock back this quarter with the price getting this low. They spent $20 billion when it was where it was before this, pretty much around $300 a share. At $248 a share, this 20% discount right now, they are going to spend a ton of money to buy it back, in my opinion. I think we're going to see a record buyback quarter if this stock remains this low for long. Now, cash and cash equivalents, marketable securities, that was at $48 billion for them at December 31st, 2021. So they have plenty of cash on hand to be able to buy back that $38.79 billion that they're authorized to buy. And I would not be surprised with the cash flow coming in that as they get through that, they're going to issue more repurchasing authorization. They issued in the last quarter a $50 billion buyback program, and they still had some money on the program from before that they could go through, and they have already eaten up such a large portion of that buyback program. So I won't be surprised to see them put this money to work. As far as their head count, it was 71,970 as of December 31st, 2021, an increase of 23% year over year. Now, Meta always gives us some nice, easy charts to look at just to see how the progress is going across different types of revenue sources, etc. So for the advertising revenue by user geography, in the rest of the world in the Q4 2021 earnings report, it was 3.22 billion, Asia Pacific 6.18 billion, Europe 8.174 billion, and US and Canada $15.06 billion. You can see nice growth across all segments, but especially in places like rest of the world, Asia Pacific, Europe. In US and Canada, a year ago, Q4 2020, it went from 13.1 billion to 15 billion in advertising revenue. It's a nice increase. But if you're looking at Europe, for example, 6.8 billion to 8.17 billion. That's a much higher growth rate. When looking at Asia Pacific, 4.7 billion to 6.18 billion. Huge growth there. And rest of the world at 2.5 billion in 2020's Q4 to 3.2 billion this quarter. Next, we have ARPU, the average revenue per user for Facebook. Worldwide, it's at $11.57. This is up from a quarter ago at $10 or a year ago at $10.14. It was kind of stable. It did increase this quarter. US and Canada is at $60.57 of revenue per user. This is an all-time high. A year ago it was $53. If you're looking at Europe, it's at $19.68. This is a really big jump from the $16.50 a quarter ago, or a year ago's Q4 2020 at $16.87. So great progress there. In Asia Pacific, it's at $4.89, so a lot of room to grow there. But percentage-wise, a nice increase from a year ago at $4.05. And in the rest of the world, we're at $3.43, a very small number dollar-wise, but a huge growth rate year over year versus the $2.77 a year ago. So lots of room to grow in rest of the world, Asia Pacific, Europe getting into higher numbers, and obviously in US and Canada, these massive average revenues per user, which seem to only be increasing, which is great for the business. When we're looking at free cash flow, this quarter had $12.5 billion in free cash flow. This is a huge number. Just to put this in perspective, Q4 2019 was $4.8 billion of free cash flow. Fast forward a year to Q4 2020, $9.2 billion, and now $12.5 billion. So I would not be concerned about free cash flow, about if this business is healthy, what's going on with iOS changes, this, that. Obviously, there are negative effects, and this could be better, but they had a breaking record in free cash flow, and this business is obviously doing extremely well. Now let's go over some of the outlook, and then we're going to get into some valuation, etc. So the CFO expects the first quarter of 2022 total revenue to be between 27 and $29 billion. Now that just represents a 3 to 11% year over year growth, and that is basically a lot under what analysts were expecting. They were expecting around a little over $30 billion. So this was a big miss on guidance. This low revenue guidance of only 3 to 11% year over year growth is one of the main factors pushing the stock down in after hours. Now, it will be tough to tell where it goes from there for the rest of the year, but it's not a great guidance, and it's something we got to just kind of wait and see how it turns out. Are they sandbagging it? Is this really the numbers that it's going to be? It'll be interesting to see. They also announced they are changing the ticker symbol from FB to META, Meta. Now, this is something, if you've watched my past videos, that I actually said, I thought they were going to try to buy the name Meta. It was currently being used for an ETF about the metaverse, different stocks in metaverse, by Matthew Ball, and they were going to do MVRS as their ticker, but then they delayed it. And I rumored that it's probably because they want to buy the Meta name. And it's actually what they did. I don't know if they bought it or how they worked it out, but they clearly got the name. They announced it. Now, there's no set date on when this stock is going to change to Meta from FB, but they do say it's going to be in the first half of 2022. Now, let's get into valuation. A lot of you have waited for this point in the video. Let's go over what it's worth, where it is, etc. So total shares outstanding is just under 2.8 billion outstanding shares. An after-hours price of $249 a share puts the current market cap in after hours just under $700 billion, so $697.2 billion or so. Now, Meta has free cash flow of $12.5 billion in Q4 of 2021. I believe a 20 to 25 times free cash flow is currently a fair price, but with the recent headwinds and the uncertainty about metaverse working out, let's stick to the lower end of that guidance and stick with a 20 times free cash flow. Now, free cash flow is growing, so what I'm going to do is just annualize the $12.5 billion, times it by 4, we get $50 billion in free cash flow for a 12-month period of $12.5 billion a quarter. They obviously might come down in Q1, Q2, but then get much higher in Q3, Q4. I'm just going to average it. We do expect free cash flow to continue to grow over time for the company. So if we take about $50 billion and we multiply it by 20 times, we get $1 trillion market cap. I think $1 trillion is a fair price for Meta platforms today. They've hit $1 trillion before in market cap. I think it's a fair price based on current fundamentals, and I think there's a ton of upside. If you're doing discounted cash flow models going 3+ years out, you could actually justify an even higher market cap than that. And if you're looking at other companies like Apple, for example, which does a little under $100 billion, I think it's like $89 billion or so in net income for 2021. This company's doing about half that, yet instead of being half the market cap, they're almost a fourth the market cap. So there is a lot of room to grow from here at under $700 billion market cap. Personally, I think this stock is trading for 50% below what it currently deserves to be trading at. Unfortunately, the biggest catalyst for Meta is this whole metaverse, and that's something that's going to be eating profits for a long time before being a positive towards net income. And opportunities like this are not always presented, so I'm going to be taking advantage. I'll be buying shares. I'll be buying leaps. I bought stock in after hours on this dip. Tomorrow, I might be looking to see if I can move those stocks to options long term, deep in the money leaps for 2024, possibly. We're going to see what the premium's looking like. Now, I am holding a ton of Meta stock. This drop was extremely painful, but I am keeping my eye on the long term prospects. I'm curious if you own the stock. If you don't or you do, are you buying on this dip? Comment below. If you made it to the end, thank you so much for watching. Please like the video, subscribe to the channel, follow us on Twitter or Instagram at FFM Research. Until next time.